Hi, this is Nick Katko from BMA, along with my colleague,
Mike DeLuca.
Mike DeLuca. Welcome to today's webinar, where we're going to talk about practicing practicing understanding value in lean accounting. I'm getting some technical things worked out here. First thing I'd like to do is make sure that all of you can hear me, hear us, see my screen. So if you can just type yes in a chat box, then we'll move on. So if I can get a couple people to type in the chat box, that would be good. All right, looks good. All right, so let's move on. First, some technical items. If you want a copy of the handout, it's in your control panel under handouts. If by some chance you don't download it during the webinar, or if you're watching the recorded webinar and you'd like a copy of the handout, just send me an email. If you have any questions, please type them in to the question pane as we go, and hopefully at the end of the session, we'll have some time to answer these questions. If you are a certified public accountant and you would like to receive continuing education credits for this webinar, it's 1 hour. You have to meet 3 requirements. We will have 3 attendance check questions, which you must answer in the affirmative that you're paying attention. You must stay logged in for 50 minutes, and you must attend the live event. And at the end of the session, please email me, let me know if you'd like to receive a certificate or not. So today's agenda is, first, we're going to define customer value for accounting. We're going to look at the current state of, accounting's current view of customer value. Then we're going to look at the future state, in the context of lean accounting. What do we actually do to understand what our customers want from us? We'll wrap things up, and then we'll talk about continued learning opportunities. So right now, I'm going to turn it over to Mike for the first few minutes.
Great. So let's just do some quick introductory thoughts around what is customer value for accounting and how do we define that, and then we can get into, like Nick said, the way that we typically approach it currently and how we can shift our thinking to apply a more lean approach. Just to ground in lean thinking as a strategy, because we'll be talking a lot today and in all of these webinars as we talk about these foundational practices of lean accounting. And lean is really a thinking strategy, right? It's really around, in a lot of ways, it's around evolving the way that you think about the work and your approach to the work in order to get better outcomes and get those more effectively. So from the perspective of what is lean thinking as a strategy, it really has a focus on people-centered learning and improvement. The people who do the work understand it really well and can help and really drive an engine of continuous improvement in order to have this long-term view of serving customers better, getting better organizational results, and ultimately growing the business in service of customers. It really requires that we think across all business functions and have an aligned, more comprehensive and cohesive view of the business instead of in functional silos, and is really based on some core principles or core beliefs around continuous improvement of the value that we deliver to customers and respect for the people who do the work and receive the work. So As we get into this idea of this first foundational practice in lean accounting, which is understanding and learning how to define customer value, let's talk specifically about what customer value is in the lean construct, just in general, and then we can apply it to accounting and finance. But from the lean perspective, understanding customer value or thinking about customer value is what is the customer's perceived benefit of the product or service that they receive for the company. And this is across their entire experience. So yes, you might buy a car, you might buy a washing machine, you might stay in a hotel, you might experience healthcare. There are any number of different products or services that you might purchase or receive, and the value that you're getting from that organization is over your entire experience with that company. And the company is trying, as the lean organization is trying to use those insights, what is it that the customer's perceived benefits really are, to serve them better over time. Some of the key underlying disciplines are around not assuming we know what the customer wants, but really checking with the customer, what is it that they expect, and then how can we define that specifically so that we can meet those requirements. And then our starting point is looking at what's the value that is not being delivered that we can be improving from the customer's perspective. So, and I talked a couple of minutes ago about this idea. This is one of the foundational practices in lean accounting, and you can see in the diagram here, Nick and I are working on a new book on practicing lean accounting, and it's really grounded in 4 foundational practices: value, understanding what waste, continuous improvement, and measurement. And then those are really the 4 foundational practices. That's the gear that drives in both improving accounting and financial management in lean accounting, and then ultimately drives lean financial leadership. So we're at the first foundational practice, and so we always want to ground in where are we in practicing lean accounting. And as we get into this discussion, and Nick is going to take us, like he said, into the current state of how we often approach thinking about our work so that we can understand that and then begin to evolve that thinking, we want to think about our customers and what they require from in 3 major or primary customer groups. We have customers who use our reporting externally. As finance and accounting professionals, we prepare and deliver information to external reporting, whether it's for compliance purposes, for example, audits or grant reporting or grant accounting or filings with a governmental body. And those customers require that we have both from a quality perspective, accurate, compliant information, and then it's delivered in a timely fashion. And those customers need to have confidence in the numbers to make decisions. And these could be anything from, shareholders. Again, this construct of users of external reporting exists in all types of industries and business structures. Then we have internal users of reporting. And internal users of reporting, they want information that they can rely on, that's relevant for them and that they can rely on in order to understand performance, analyze, make good decisions, and take action. So that's our second customer group that we'll think about. And the third customer group that we'll think about is any recipient of a financial transaction. And those can be both internal and external. Externally, we're transacting with both the company's customers from a billing and payments perspective. We're interacting with the company's suppliers from a supply chain perspective, and internally, we're interacting with employees, whether it's payroll or expense reimbursement. But we have recipients of financial transactions, both internal and external to the company, who want those transactions to be right the first time, and they want it to be easy to interact with us in accounting in order to get the results of those transactions.
Okay, so we're going to do our first attendance check question. I need to find my mouse. All right, so I'm going to open up a poll. and simply select that you are attending. I'll give everybody a few seconds to do it. I get to see what percentage of attendees are voting. So we have about 75% had voted. I'll give you a few more seconds. All right, I'll close that poll. We don't have to see the results. And so I'm going to speak to the next few slides with Mike's help. You know, we talked about we're in the current state. So what we wanted to do here is really give you some real life examples of what I'd like to say is accounting's perception of creating value. Now, you know, my qualifier here is that, you know, accounting is not oblivious to understanding value. It's not, that's not the case. From a lean accounting viewpoint, it's about expanding the view of customer value, get a better understanding of it, a deeper understanding of it. And, you know, as Mike said, you know, what do our customers really want from us? So first of all, you know, our general thinking, and Mike and I both worked in finance and companies over the years. You know, we as accounting and finance professionals, we get a technical training, and you know, our job in our minds, we want to be good accountants. Okay, that's the way we think. We have to be good, and so you know, we learn all about generally accepted accounting principles. You know, how do you how do you know your numbers meet compliance requirements? And that sort of really drives our thinking. You know, that this is true for external reporting, but you know, we can sometimes take it too far and say, well, every number we publish, whether it's used outside or inside, you know, it sort of has to be GAAP compliant. It has to reconcile. It has to be very, very precise. The other aspect of value, and again, this is just the nature of accounting work. It's very transactional in nature. We have the month-end cycle. We produce the financial statements. We pay bills each week. We invoice our customers. We pay our employees. And this is, you know, these transactions are on standard cycles. You know, we know we have to pay the bills every Thursday. And so we do it. And there's a lot of busy work involved in that. And we have a tendency to, you know, we got to get the bills out on time, and we have to do whatever it takes to make that happen. So our approach to work, we have these work routines. We got to get this work done. You know, we have this schedule we have to meet. We have deadlines we have to meet. And so, you know, we tend to focus internally about this. And as anybody who has worked in accounting for any length of time knows, there's always work to do. We're always busy. There's always something to do. So we're going to give you some examples, and all of these examples actually are real life. Either Mike and I experienced them personally, or in working with companies, these have bubbled up to the surface. So when it comes to external reporting, and the first bullet point, this comes to this is related to my first job in a company where I became the CFO, but I didn't start as the CFO. There was an older person who was the CFO who was going to retire, but he was sort of the old-fashioned type of accountant that believed in precision. You know, everything had to everything had to be compliant with GAAP. And so we had a long close period. And,
Mhm.
the reality was that the managers of the company didn't like that long close period. A second example, and this is a company that I work with, is they told me that, hey, we closed the books in 2 days. And I just, casually asked them, I said, so how have you accomplished this? They said, well, we work 14 hours a day for 2 days to close the books. The third bullet point is almost what I would call an analysis paralysis. And I've seen this in many, many companies and actually experienced it also as in my first job, in the fact that you have these like monthly reporting packages that go out that, yes, they contain the financial statements, but they contain many, many graphs and charts and sort of slicing and dicing the numbers in many, many ways, uh, that accounting thinks everybody needs. But the reality is, the users may not need all that. Now, I'm not talking about things like the supplemental reporting information that is required, for example, for SEC filing. I'm talking about more information accounting things. And then finally, there's the month-end process in itself, where we spend time during month end correcting defects that occurred during the month because we have to make the numbers right. And also this idea of trying to achieve precision and making sure that everything gets accrued properly. And even if the amount that is being accrued is not really material. Mike, do you have any examples?
Well, I want to add my examples to the internal reporting when we get there. So
Okay, so I'll let you go first, Mike, on the internal reporting.
okay. Um, the, it, Again, I think I want to come back to, as we're talking about the current state, none of this is really is ever intended to sound critical of anyone in the accounting and finance profession. We are highly capable, highly trained, like Nick already said. I think the view that we're trying to really emphasize here is that we do intentionally really good work, and what we're trying to understand is to what end, what's the purpose. And so Nick talked about some examples of the work that we do that meets external reporting requirements. My role in leading a team that was whose primary function was financial planning and analysis, we were responsible for much of the internal reporting. And so a lot of the internal reporting issues that we can get into in the current state that aren't necessarily meeting customer requirements or end user requirements as we get into them is the analytically elegant or in-depth work that we do around things like allocations and costing, that ultimately, when we look at it, may not meet the end user requirements. So we'll talk more about that in a little bit. But but there are a number of things that we do. And Nick talked about the reporting package that comes out at the end of close. Then once the books close every month, there are a lot of performance reports that go out to the organization. And in my particular group, after on a monthly basis, and like Nick, you said, our work is very much driven by a set of calendar-based routines. And so in my team, we would send out hundreds, really over 400 monthly reports to the organization once we had closed the books at the end of the month. And we'll talk in a little bit about what the transformation that we did when we looked at who's using them and how are they using them. But many of them were actual to budget reports. And the budget can be at a level of we did both budgets and forecasts or financial projections, and those can be to a level of detail Like Nick, you talked about the level of detail for some of the external reporting. Some of our internal reporting is, whether it's budgeting or analysis or forecasting, is to a level of detail that may be more than actually supports the end user's needs. And then this last one, and this came in the context of both month-end close, because we had pre-close variance analysis, as well as variance analysis once the books were closed at the end of the month. And there can be a lot of activity around variance explanations, but to what end, right? Again, as we think about, we do really good work, we're technically extremely capable and highly trained, but what is the ultimate benefit that the organization is getting from a lot of this really well done work that we do that may not have the impact that we'd like it to have, like this idea of variance explanations, but that don't result in any action.
Yeah, the most of the manufacturing companies that I've worked with over the years, the first two bullet points in some form or fashion are usually issues. And again, it's you know, these issues are raised by the customers, like the leaders of the company, or maybe the operational leaders. They're not sort of pointing any fingers at accounting. They're really pointing fingers at the information, saying, you know, we don't understand it, and or we don't use it. And so, you know, why is this still going on? The third bullet point, the what's in quotes, you must make your budget this month. This was an actual conversation that I was listening in on. It was a plant controller who was on a conference call with the division controllers and the other plant controllers. Actually, the plant controller that I was with didn't know this was going to be said, but the division controller's point was this: hey, the company is not meeting its financial reporting goals, or, you know, financial goals in terms of revenue and profit and costs. And so the division controller basically said to each of the plant controllers, next month you must make your budget, and you must figure out a way to make your budget, and I expect you to send me your action plan, you know, in a week. And this happened to be a factory that was pretty much machine based. The products were made by machines, not people. And so it was just, you know, sort of an interesting view on, you know, what value is in terms of you got to make the budget. Doesn't matter how you do it, just make it.
And I think that really ends up causing us to do an awful lot of transactional work in finance and accounting. That, to your point, Nick, it doesn't add any value. So there's this dictum, and this occurred in my organization in a somewhat similar fashion, where you have to make your budget. There's a lot of attention on what's your budget variance at the end of the month, and so therefore folks are micromanaging. Well, I don't have the right budget in the right place, so will you move this budget from one line to another, or from one department to another? No, I'm serious. In a $4 billion organization, our minimum threshold for budget transactional fixes or budget changes was $2,000. So at the end of the month, we would do all of these budget changes, which ultimately did not improve the company's financial performance, but it might make one manager look slightly better or worse. And again, this is really, we have to get back to what's the value add of doing that transaction.
So the third group of customers, the recipients of financial transactions. So, you know, you're looking at accounts payable, accounts receivable, payroll, things like that. You know, what's interesting here, and it's very unique to accounting processes, is that the supplier, that the customers of these processes, when you think about it from a process perspective, they are also suppliers, meaning they provide initial input information, which accounting basically processes and converts, and then sends something else out to the customer of the process. So if you think about invoicing, your customer may send you a purchase order. Accounting, that gets into the business, but eventually accounting, creates an invoice. And so, the company's customer, is on both ends of that accounting process. And so, here it is, some examples, sending complex invoices to customers, or maybe they're incorrect. I did some work in a company that was a service organization, and they did progress billing, and they had a problem with their accounts receivable, and after some investigation, what they would do is they would send out the progress billing, and this was a company decision based on the dates in the contract, not based on the actual work completed. And the customers would not pay these invoices because, the work that was supposed to be completed wasn't completed, even though the date to invoice was there. Another aspect, especially in accounts payable, is, paying suppliers on your terms, not the supplier's terms, or not some mutually agreed upon terms. And that does nothing but damage the supplier relationship. Now, I know there's a lot of articles and practices of, that's good cash management for a company to extend your supplier's terms, but it damages relationships, because if you extend your supplier's terms based on what you want to do, that's going to cause a cash flow issue for suppliers, and it may impact the supplier's ability to deliver future products and services. Then there's what I call the coercive dispute resolution, where you don't work with your customers or suppliers in a very timely fashion, and these disputes linger. So what do? You put a customer on credit hold to get their attention, or you withhold a payment from a supplier to get their attention. And then there's the firefighting approach to disputes, where there's no standard approach. We deal with the disputes as they occur, and we resolve them over time. Eventually, we get them done. And finally, when it comes to employees, the input that employees may have to make into time tracking systems in order to get paid. This is primarily true for hourly employees. Very, very complex. Like we have to clock in and out of jobs, even by scanning. But the minimum amount that's needed to pay an employee is how many hours did they work, not necessarily what did they work on. You want to add anything, Mike?
No, I think that last one comes into play in a lot of situations where organizations have a reporting need for tracking time relative to a particular customer bill, or grant accounting, or other situations where there's a need to do project-based time tracking, and yet it can be overly complex and also very difficult to administer, both from the employee's perspective and the company's perspective.
Yeah. All right, so let's look at the future state, and I'm going to turn it back to Mike.
Good. So all of these things that we do, again, not critical of us in accounting and finance, and not at all critical of our capabilities and our technical expertise, but really what we're doing is to say, okay, we have an opportunity to take our great technical expertise and the systems that already exist, and say, how would this really more effectively serve the company and its customers? So the shift in thinking is to balance our technical expertise with understanding what the customer of each of these sets of processes, transactions, and services outputs really requires, so that we can do that high quality in a timely fashion, and as effectively as possible. So we'll get into specific examples and talk about a method, a practice, a set of practices to do this. But one of the things that's at the core is really understanding who's the determiner of value, and ultimately it's the end customer. It's the customer who is requiring that particular report or transaction or output, who's the ultimate determiner of value. And it's important for us to understand by actually connecting with the customer what's most important, and also by building a relationship, a really collaborative relationship between accounting and internal and external customers, so that in many cases, and Nick, you gave some examples in particular in the context of month-end close, where we do a lot of fixing at the end of the month on a transactional basis that's due to transactions not being entered or coded potentially correctly the first time. But a lot of this is cross-functional. A lot of this comes from how was the purchase request or the purchase order initially coded when it was created, and that's done upstream. So we really have to work on relationships and then use those relationships to improve the processes collaboratively.
Yeah, one thing I wanted to add, and I think it's important to understand when it comes to lean accounting is, that there are aspects of lean thinking that what Mike and I like to say are unique to accounting. And it's in the second part there, that accounting has many customers with different needs. That's a lot different than, sort of, traditional lean thinking a lot of times is focused on sort of like manufacturing, where you have a product and, you make the product to quality specifications and deliver it on time, your customers are happy. The analogy is accounting, for example, is more like any of us going to a restaurant where, it's the entire experience. Yeah, it's the quality of the food, but it's also the experience we have in the interaction with the staff, how, and those are very sort of unique to every user. And I think that's what's the real key for accounting and finance employee staffs to understand when it comes to lean accounting.
So as we go into how lean accounting is helping us evolve our thinking so that our expertise is much better and better used in service of the company and its customers, we're going to go through this initial, like I said, foundational practice of understanding customer value by looking at these four different steps or aspects of the practice. Listen to the customer, incorporate their requirements by understanding how would we turn what we've heard from them into a measurable performance standard. Look at the processes that actually deliver on that outcome and understand how they're performing, and then work to improve those. So we're going to talk about each of these a little bit as we go through with some examples. The first one is really to go ahead, Nick.
No, go ahead. Sorry, there we go.
I was just going to get started on voice of the customer and then talk about a couple of different ways to get the voice of the customer. This is something that for those of you who are in lean organizations, you should be familiar with this idea of let's gather information from the voice of the customer, and then use that to either establish or really fine tune our performance standards. So let's go into some of the next slide gives us a couple of the methods for doing that. So different ways that we can actually gather voice of the customer or input from our customers around what their actual requirements are and really effectively understand those are different. Really, we have different sources, and certainly we have contractual terms with both customers, with the company's customers, as well as the company's suppliers. And so those are certainly performance standards. we might actually need to build on those to get information around what is the, to Nick's point, it's not just are we meeting the letter of the contractual terms, but what's the customer's experience or the supplier's experience in transacting with us? Is it easy for them to do it with us? When a customer gets a bill, is it easy for them to understand the bill and make their payment? Sure, the bill was delivered to them on time and we're good at collecting revenue from customers in a timely fashion, but how easy is it for the customer? Because in many ways, finance is not delivering the product to the company's end customer, but we have an opportunity to really build on a customer's loyalty with our company by making it incredibly easy for the company's customers to transact with us. So this can be direct conversations. It can be through colleagues in sales who are having direct conversations, or even colleagues in customer service who are having direct conversations with external customers. We may be having those conversations with external suppliers. And it's important for us to have direct conversations with our internal customers as well. We've talked about things like internal reports and having really intentional conversations with internal customers around how do you use this report to improve performance? How does this transaction help you make a better decision? How does this particular allocation model or output help inform a better decision around pricing or incremental production or whatever that might be? So direct conversations are key. Surveys around the use and the effectiveness of our products and services can be really impactful. And going to see as customers can again, to use the idea of a monthly report, can I sit down with you and really understand how, when you get this report, what's your process to go through and read it and interpret it and then use it to inform action and decisions? And Nick, we have in here this idea of a Cybox chart, and I think we've got an example of supplier input, process output, and customer. This helps us in finance and accounting really understand for each of our processes what is it that we are providing as outputs so that we can really fine tune our questions to our customers. You've got an example in here. I'll let you add thoughts to this and go through that example.
Yeah, one thing I wanted to add here, is for accounting and finance to recognize that, customer value is very dynamic. It's not necessarily static. And the real, methods to gather and capture the voice of the customer. Another way to say this would be establish relationships with your customers. And just like we have personal relationships at work or at home or, socially, it's about communication. And it has to be a mutually beneficial relationship. So that's really, again, moving beyond the transactional into the relationship. And Mike talked about go see, and I guess it's. I'll let Mike talk about this first. Sorry.
No, that's fine. And I was transitioning to you because I knew we had the Cybox chart coming up. But this go and see practice, like I said, one example is can I sit with someone when they're using a report that we deliver and understand how they actually use it? Is it easy for them to access? Is it easy for them to read? Other things that we can do from a go and see perspective, we've talked about folks doing transactions like reporting hours for project accounting or for grant accounting or in order to generate a customer bill. Sometimes it's important for us in accounting and finance to go sit with the person who's actually tracking their hours to understand how straightforward is that? Where is it easy or hard for them to get it right and easy for them to make a mistake that we end up then correcting at the end of the month. So there are a lot of opportunities for us to go see, in particular internal to an organization, how our colleagues, our suppliers, right? And then we'll get into this idea of the suppliers, the inputs, process outputs, and customers in a second. How our suppliers are giving information to us in finance that we then have to use to create compliant financial outputs, and then also how are the customers of our reports, transactions, and outputs using those. So GoSee is a really important technique in
Yeah.
understanding that.
Two things I wanted to add here is I think GoSee is sort of the totally opposite of accounting policies and procedures, especially internally, where we set the policies and procedures for the company in terms of what has to be done in their involvement in accounting transactions, and we sort of set the policies and procedures based on what we think should happen. Another thing which just popped into my head in terms of GoSee, given what we've learned over the past year with the pandemic, is that doing virtual GoSees with people outside of your organization, your customers or your suppliers, and being able to see how the interaction of the work, for example, a customer having to enter an invoice that accounts receivable sends. So you can do virtual GoSees too. It's possible.
Yep. And really critical, since a lot of our work is knowledge work done on a screen anyway. Sharing screens is an easy way to do that.
So the idea of a Cybox chart, for those of you who may not be familiar with it, Cybox stands for Supplier Input Process Output Customer. And this is a really effective tool to better understand, it might, better understand maybe, who the customers are of accounting processes. Because when you think about a process, there's outputs, and each output may, it's not just the final output. There might be outputs throughout the process that are used by certain customers of the process. And so it's a simple, effective exercise. This is just an example of a month-end close. And here's the interesting part about the Cybox process, which was too hard to explain on a slide. You set this up, and using Post-it notes are great. The first step in the Cybox process is to list the process steps. The second step in the process is to define the output. The third step is to define the customer. Then you go back to inputs and suppliers. So you don't work from left to right, you work from the middle to the right, then you complete the left. And doing this in a team-based environment, like all the finance and accounting staff in a process, really is, it makes the process visible, it makes customer requirements visible, and it also creates a lot of consensus, because everyone is agreeing that this is what we do today.
So now we've got some techniques, some approaches to identifying what is it our customers are receiving from us, and what do they value from it. What's important from their perspective. How would we measure? Right, we have to turn, if a customer says, I want to get that quickly, or I want to be sure it's always right, or I want it to be easy to use. Those are helpful inputs, but they're not what we're really good in finance and accounting at measuring things and using numbers, and we want to be really intentional about using those strong skills to say, here's what I heard you say, here's how I'm going to check, here's how I'm going to measure whether or not I'm able to deliver on that on a regular basis. And so we have these really common categories that we want to try to push our thinking to say, do we have a measure in all of the categories that are relevant for a particular process? So that could be, for example, if we think about the work that we do to bill the company's customers and then collect revenue from them, collect payments from them, does the bill always make it to the customer in a way that is clear and defect-free, right? Do we have a first-time correct bill going out to the customer? And Is the customer discovering errors with the bill? Maybe not, but are we discovering errors before we send it out in checking steps where we have to do rework before we even get it out the door? So we want to look at the quality of the output to the customer. We want to look at the delivery. Is it getting to the customer in a timely fashion? A lot of my background is finance and accounting and healthcare, and getting a bill to a customer can be a very lengthy process because there are a lot of dependencies in order to complete a clean claim to send it to whoever the ultimate payer is. So how timely is that? What are our standards around timeliness for getting it to a customer? If you've been a patient in a healthcare system, maybe it's happened to you. I know it's happened to my parents when they were still alive, where they would get a bill from a hospital or a clinic 6 months after the appointment and not even remember why they went to see the doctor, right? So what is the timeliness? I'm not, Nick, you're laughing, but hopefully some folks, well, maybe not hopefully, but likely some folks can relate to that. So that's the delivery. What's the timeliness for getting a product to an end or a service to an end customer or completing a transaction? Then what's the overall lead time from the time that we begin this? And we can even think about this in terms of, I'll switch to payables. From the time that we get an invoice from a supplier for it to get logged into our system, whether it's electronic, paper, however that works, and make it all the way through the coding and approval processes to the point where we cut a check and that actually is delivered, again, electronically or in paper to the supplier. What's the overall lead time, right? And how do we translate what we're hearing from our customers into really, really effective and meaningful lead time targets? And then our own productivity measures. How are we best using the time and the skills of our talented and highly trained accounting professionals to deliver on these outputs? And so this isn't about accounting folks working harder. It's not about the 14-hour days that Nick talked about and getting to the financial close in 2 days earlier in the presentation. It's more about how are we making the best use of financial and accounting professionals' times, not so that they're not driving more productivity so that they're working harder, but so that we're making more effective use of their time by eliminating the waste.
All right, let's do attendance check number 2 real fast. All righty, thank you very much. And we are back on the presentation.
Good. So we've talked about what is it the customers want? How can we turn that into a measurable standard so we can check our performance and check improvement? Now we have to look at our processes and say, how do we understand whether our processes are set up to be able to easily deliver on that? And so we'll spend a little bit of time on this in the next one. I want to make sure that we get through the rest of the content so that we have a full picture of this foundational practice. But as we're looking at our processes, how effective are they at delivering on those standards, quality, delivery, lead time, and productivity? By looking at each process is made up of a number of activities. Are those activities value added? Is this a step in the process that actually helps me get that outcome, is critical to the output, whether again, a correct bill, correct payment, correct financial transaction, whatever that might be? What are some other steps or activities that we go through in the process that are necessary, but they don't necessarily advance that product to the end point? And then, really importantly, as we look at our processes, we will discover activities that we do in the context of all of these different types of processes and delivering products and services to our customers in finance and accounting that really don't add any value at all and aren't required by either the company or an external agency. So really beginning to see this distinction is important in our understanding of value.
And if value is understood, then it's easy to distinguish these activities. And the only thing I wanted to add on this slide is that in accounting processes, there are a lot of tasks or activities which are performed in a process which accounting and finance employees think are are required steps, they create value. But when you look at it from a lean viewpoint, that they're non-value added but necessary.
Yep.
That's what's interesting
So actually,
about that.
as we go into the next slide, maybe we can make this a little bit more concrete with a quick example as we look at the next slide. Value added from the perspective of payables. I cut the check and deliver it to the supplier. That's the value added step because the end customer is getting what they need. Non-value added but necessary are internal things that I need to do in order to be compliant. I need to make sure that we actually received the product that we're paying for. There are a number of things that I need to do that ensure that I'm compliant, but it actually doesn't, from the supplier's perspective, they don't care. As long as they get their check, that's what they care about. Then there are, in that red category, there are a number of things that we do that are neither required nor are they value added. There may be approval steps that are empty control steps. And I think many of you will have a good sense of what I mean by that. People may be reviewing an invoice, but not actually reviewing it in a meaningful or substantive manner. So it's a review step, and we think that that's part of a control process, but as we analyze the process, and this is why we're looking at what's our continuous daily management, continuous learning loop, how are we learning about each of these steps in the process and then what it actually does to advance the work. And so we use that by making the work visible, and using a status board or a team-based work board or a visual system so that we can bring forward these and start to make visual, whether it's building a Cybox or some other method of making our measures visible, to identifying the problems and issues that we can then begin to work on. And we do this on a daily basis, and it says daily huddle here. There's a daily huddle or a stand-up meeting. What we're trying to do is set up daily routines so that improvement isn't limited to, oh, in a couple of months we're going to do an improvement project. But improvement, this idea of thinking about value and how to improve that, becomes part of daily routines, and identifying those improvements again becomes part of daily routines.
Yeah, and a couple of things I wanted to add here is, we want to in some finance and accounting processes, looking at on a daily basis is really drives learning, because anything that is impeding creating value, problems and issues, it could be waste or many things, these occur on a daily basis. And what we want to do in lean accounting is get out of the firefighting mode and get into the fire prevention mode. So the only way we can do that is to understand, what are the reasons for the problems and issues. If you look at problems and issues on a daily basis, it's easy to, there's fewer problems and issues on a daily basis than if you look on a monthly basis. And it's also easier to understand, one, how can we fix the problem and issue fast? Secondly, it's easier to understand root causes. So that's really the idea behind daily lean management. You learn, accounting processes are pretty much invisible. They're done in systems on computers. So we're trying to make the invisible visible through daily lean management. Go ahead, Mike.
Good. So just as we think about this idea of creating daily routines or habits, about asking these questions around value, asking what's getting in the way, really understanding how are we measuring it and what are our processes that are delivering on that value. What we wanted to conclude this part of the practice with is thinking about, be aware that there are different levels of improvement activities. Not every improvement is a 4-month project, and hopefully most of them aren't. Hopefully we'll have a number of quick wins that we can do on a continuous basis, and I've seen accounting teams, as they really develop these habits and routines around daily management, say, oh, here's something that we can do quickly and easily to make this part of the month-end close process go more easily, be more dependable, be more timely, whatever that might be. There are daily improvement activities that we can do as part of our work routines to do more structured process improvements. There are cross-functional process improvement projects that we can do where we're starting to now work with upstream suppliers. We're working through that whole Cybox structure to understand if we're, for example, going to improve month-end close, we need to work with the people who are initially coding transactions to begin with that we then end up reviewing and correcting at the end of the month. So those are longer cycle process improvements. And then there's innovative work that we can do in finance and accounting. One example might be something like in our organization where we had an annual budgeting process, we completely transformed that to a series of rolling forecasts that were at different levels of detail based on the end user requirements, and moved away from this idea of a very cookie cutter static operating budget. So we have different levels of improvement activities, but it's all grounded in this idea of a change in daily thinking and setting up new routines and habits around understanding value and questioning that.
All right, let me do the final attendance check real fast, then we're going to wrap things up. We have about 5 minutes left. So go ahead and please complete this. All righty, got just about everybody there. I'll close the poll. And so let's wrap things up. So what we want to wrap up with some practical advice, because we've sort of been talking about this from a lean viewpoint, and the fact of the matter is, you in accounting and finance may be new to lean, and this is a learning process. Okay, it's not like you're going to go out there tomorrow and study customer value and be done. So this idea behind practical advice is, what are some simple initial messages in terms of communicating and talking about practicing understanding customer value? What does it mean, okay, in sort of maybe non-lean terms? When you're talking about the financial transactions, you want to sort of really simplify things, make it easy for all of the customers of these financial accounting transaction processes, make it easy for them to work with accounting. So the effort that the customers have to put in, and this has to be from the customer's point of view, not what accounting thinks. Simplify relationships when it comes to transactions. Measure quality. Okay, make sure that the information going out is of the right quality that the customer expects. It's much more than completing the transaction. And again, go back to the restaurant analogy. You want to serve quality food, and you want the entire experience for the diner to be great from the moment they come into the restaurant and all the people they interact with and the ambiance and all that stuff. So you want to sort of be one of those 5-star Michelin restaurants when it comes to financial transactions. In terms of your internal customers, which really are your most diverse group of customers, because you're dealing with a lot of people in the organization in different functions. So in a lean company, in the needs of internal customers change. So you have to create this awareness. Your awareness of what is relevant and reliable information to them. What do they need? Why do they need it? When do they need it? So don't make assumptions. This is about listening and learning. Also be collaborative in defining what's relevant and reliable. Okay, and it's this really boils down to the management accounting system, and it needs to be transformed into a lean management accounting system. Okay, it's not about having two systems. So really bring the voice of the customer in to this process. And practicing understanding value, in general, we talked about how accounting and finance is very good at understanding generally accepted accounting principles, building systems to ensure compliance, and you know, accounting knows when they issue financial statements that they're compliant. And so we want to take that same approach that we know in terms of maintaining compliance and apply it to all of our customers equally. And remember, it's about the relationship. Okay? Have good relationships with all of your customers. So just some final reminders, you're going to get a survey. It's actually 6 questions, not 5. Please complete the survey. It's going to pop up as soon as we end the webinar. Helps us improve things. If you want CPE credit, please send me an email. And then in terms of learning opportunities, we have 3 more webinars scheduled right now in the Practicing Lean Accounting webinar series. There's the links to register. Please register for them. And then, you know, other learning opportunities. At the BMA website, you can join our mailing list. Also, you can get updates about the Practicing Lean Accounting book, which has a projected publication date of spring, but we don't have an exact date yet. And for all of you, you know, a place to learn on a very casual level and interact and develop relationships is the Lean Accounting Community Chat, which is the 3rd Wednesday of every month. You register once, you're registered for every monthly session. You don't have to attend, but you're automatically registered. So please consider that. Any final thoughts, Mike?
No, just appreciate everyone's participation this morning, and hope you'll let us know if you have questions and that we see you in these other forums.
All right, so thanks for attending. Please stay safe, take care of everything, and hope to see you soon next week at the community chat and next month at our webinar. Bye-bye.
Thanks.